Welcome to this week's episode of Accredited Investor Markets Radio. Each week, we speak with you about investing in alternative assets. Unbiased and beholden to no one, Accredited Investor Markets Radio does not accept advertising from any investment firm or financial advisor. Accredited Investor Markets Radio is the spoken word sister of AccreditedInvestorMarkets.com, the internet's most comprehensive and unbiased educational resource about crowdfunding, angel investing, venture capital, private equity, private shares, and other investment classes beyond publicly traded stocks and bonds.
Hello, everyone, and welcome to Accredited Investor Markets Radio. Later on, we'll be speaking with Swati Chaturvedi of Propel X. Propel X evaluates deep tech companies for investment purposes. The interview will concern deep tech due diligence, the process by which the promise of such a company is quickened or dampened, maybe pronounced dead, maybe pronounced just resting. Before that, let's talk about being healthy, being wealthy, and being wise. Why? Because these are the three categories of articles on the Financial Poise website. Financial Poise website is the gateway to AccreditedInvestorMarkets.com. And the Be Healthy, Be Wealthy, and Be Wise articles, they strike a different tone from the investment-related articles you find elsewhere on the site. Of course, the inspiration for the title of these categories is Benjamin Franklin, who famously said that early to bed, early to rise makes a man healthy, wealthy, and wise. And I note that we better quote Benjamin Franklin now while we can, while he's still remembered. After all, the Treasury Department, which Alexander Hamilton had a great deal to do in making what it became, has seen fit to cast Alexander Hamilton off the $10 bill, which hipsters should call the sawbuck if they had any wit. So how long, if Alexander Hamilton is being tossed off the 10, how long is Ben going to be emblazoning the $100 bill? Maybe soon there will be headlines like, "Not all about the Benjamins." Well, FinancialPoise.com's life hacks are devoted to Benjamin's formula anyway. They might outlast his tendency on the $100 bill. And as regards being wealthy, for example, there's an article on there on whether it is worth delaying starting your reception of Social Security benefits. That can help you be wealthy. And from one angle, you might consider being wealthy the main thing, because after all, if you're wealthy, you can purchase the appearance of health and the patina of wisdom. A more morally mature viewpoint might suggest that it's false route to health and wisdom to try to purchase those things with wealth. Well, if you want to give away your wealth or lose your wealth, you might try investing in movies. That's an overstatement, of course. But if you're curious about investing in movies, because after all, it's fun to invest in movies, I urge you to look at an article on AccreditedInvestorMarkets.com entitled "A Few Minutes with Robert LeBate." We will be publishing an Accredited Investor Markets Radio interview with Mr. LeBate shortly. Robert LeBate is a good man and a very prominent and able entertainment attorney, as well as a commercial restructuring attorney, like yours truly. And so I'm very pro-LeBate, you might say. And the fact is, some movie investments do pan out handsomely. Mr. LeBate can help you understand not how to separate the wheat from the chaff, but maybe how to turn chaff into wheat, or at least to give yourself a chance to do so through a wise way of investing. Well, speaking of flops, and I refer, of course, to the failed movies, Google Glass was a bit of a flop, wasn't it, as far as consumers go? It did not really catch on with consumers. The fact that Google Glass did not catch on with consumers, of course, eliminates one potential distribution option for movies, but I digress. Regarding the consumer unpopularity of Google Glass, I never thought it would catch on. Of course, I never thought wearing baseball caps backwards by non-baseball players would catch on and become acceptable and even desirable. I never thought Bluetooth would catch on. It looked too weird. I don't see Bluetooth earpieces as badges of success and indispensability. I see them more as a badge of a kind of servitude, but that's just me. Maybe I can convince you that Paul Newman of Cool Hand Luke and Jack Nicholson of One Flew Over the Cuckoo's Nest would have nothing to do with Bluetooth or wearing baseball hats backwards. Or for that matter, Google Glass. But Google Glass is not dead. It's far from being a flop. There's a Wall Street Journal article dated June 2nd, 2015. Smart glasses get new look on factory floor. So why does Google Glass help on the factory floor? Because it's hands-free. You get information through the glasses, and your hands are busy. Maybe changing the direction of an order. Maybe the Google Glass is directing you how to troubleshoot a robot to do all the real work. You can also imagine how, I don't think this is in the article, but you can imagine how a surgeon would like maybe to have Google Glass. Maybe more realistically, an attending physician visiting patients in the hospital who has to fill out medical records. Doctors find this very cumbersome, not least because if you're filling in electronic fields on a iPad or something, you're not looking at the patient. You're unable to weigh how the patient thinks or feels fully without looking at the patient. You can't do that. Well, maybe there's a way to fill out those fields through Google Glass, so at least you could keep most of your eyes on the patient. And I'd be surprised if the technology involved in Google Glass weren't already being used by the military, where being hands-free can save your life and cost the enemy his life. But moving to a less morbid topic of international real estate, I note that a few interviews ago we spoke with Scott Picken of Wealth Migrate. Picken is from South Africa and has done deals all throughout the world, selling and investing in real estate. It seems to be catching on. Picken said in the interview, as I recall, that Chinese nationals who are evading currency controls in China have sent cash abroad to invest no less than $20 billion a year in real estate in the United States. So it's a good choice for them, and you can imagine that as restrictions are lifted, the amount of money will vastly increase. USA Today, in an article dated June 1, 2015, entitled, Where World Super Rich Drive Residential Prices Soaring, talks about wealthy Chinese, wealthy Russians, others, driving up the prices of residential real property in swanky places, swanky cities, making such property further out of reach for the comparatively modest 5% and reachable only for the 2% or 1%. We're talking about cities like London and New York, where it's extremely expensive to live, Miami, Istanbul, Sydney, Vancouver, and of course Hong Kong. I quote from the article. In the last year, residential property prices in prime locations favored by foreign investors rose sharply, 19% in New York, 15% in Bali and Istanbul, 13% in Dublin, yes, Dublin, 11% in Sydney, according to Knight Frank, a London-based real estate consultancy with clients spanning the globe. So this is a real globalization of investment. Why is it happening? Well, I guess maybe some of it is a flight to quality. In a place like Russia, where there's been high inflation, you'd send your ruble somewhere to buy something solid that will maintain its value, notwithstanding the inflation in your own country. It could be a reflection of limited or smaller yields. In China, the yields are down. They're much higher than here, but they're down compared to what they've been before this era in China. Fundamentally, one never does lose money investing in Manhattan real estate. So why not do that with money you have free to invest? Maybe this will change, though. Maybe this investment direction will change as yield from business investment worldwide or in the United States rises, perhaps with the raising of interest rates by the Federal Reserve of the United States. With respect to China and Russia, again, maybe some of this investment reflects a bet against authoritarianism in places like China and Russia. Well, there's a bunch of factors. If you want to understand what's next, you have to review such factors, look for the real causes, explain, weigh one explanation against another, and then you have some bases on which to make investment decisions. Well, I can't offer you those because I don't know. If you know, or if you can direct us to some person or to some writings pertinent to that, I'd be very interested to learn. Yes, please, if you have such thoughts, contact me at ccahill@financialpoise.com. And now on to our interview. With me today, and for the second time, is Swati Chaturvedi, co-founder and chief executive officer of Propel X, an online investment platform that brings investors to deep technology early stage companies. Deep technology includes, for example, the next generations of genomic sequencing, smart prosthetics, robotic surgery, and cancer therapy, among many other things. The principal goal of Ms. Chaturvedi's platform is to enable diligence in companies that have applications of deep technology. So due diligence is a huge part of what Propel X does, and we're going to focus on that today. But before we do that, I'd like to also just simply fill you in on Ms. Chaturvedi's background. Before starting Propel X, Swati worked in management consulting and investing. Before that, Swati sourced and evaluated deals in the industrial automation sector with Siemens Venture Capital. And Ms. Chaturvedi is also the co-founder and coordinator of the MIT Alumni Angel Investors Group. She has an MBA from the Sloan School of Management, an MS from MIT in the Technology and Policy program, and an MS from UC Berkeley in civil engineering. She also, by the way, holds a bachelor's degree in architecture from the Indian Institute of Technology. I love reading that description. Ms. Chaturvedi, what a pleasure to have you with us again today.
Thank you, Chris. And hello, everyone.
So Swati, thinking of diligence for deep tech, would I be correct to break it down basically into the following three phases? A, does it work? B, could it sell? And C, are they ready? Meaning, is the startup poised to capitalize on the scalability, sellability, and basic science of their venture?
Yeah, I think that's a really good and simple way to look at it. Deep technology companies specifically have some other risks that you should be considering. So what you mentioned was, does it work? So that's actually technology risk, which is very important for our companies. Then you had, could it sell? That's market risk, right? Does there exist demand for this? And are they ready is more like an execution and team risk. But other than those, especially if you're looking for companies that are heavy on technology, you should consider IP risk, right? And really analyze their IP. In addition to that, you might find that, especially in the areas of medical technologies, regulatory risk can be pretty key because the FDA gets involved. And finally, some of the companies that need a lot of cash to actually have an exit, some of them may face pretty significant financing risk because they don't know whether or not the cash is available down the line. So certainly building on the three big buckets that you talked about, I would add to those regulatory, IP, financing risk in addition.
Well, okay. For an investor, remember these are startups. Those are all very plausible risks and very interesting risks. But an investor will be wondering, what's the exit potential? How much money do I make from it, and when? I mean, how do you get to that sort of answer?
I think that's a very good question. And in startups, that tends to be a little bit, I would say very early stage startups, it is a little bit speculative, right? But certainly one of the things that you definitely want to have is you should be able to think of 5 potential acquirers at minimum for that company. Right? If someone finds it valuable, they could acquire it. And if they're going to acquire it, then there could potentially be an IPO as well. But you should be able to think of who could be the acquirer, 5 potential acquirers. So I think that's important. And then besides that, if we were to really try and answer the question, how much money am I going to make from this, you certainly need to do a financial model. You can do very simple financial models. We have some discussion on our blog where I've talked about one specific company. But I think you need to think in terms of multiples. You need to look at who else has made what money for other investors, what was the exit multiple, and so on. So there is a little bit of detail that goes into that. It's hard to pull out of the box, and it is very speculative.
Something you said earlier made me want to ask the following question. You said, does there exist demand for this product? And then I started thinking, well, a lot of cases, what's charming about a startup is that it's creating demand. And what I have in mind is something I spoke about some weeks ago, which was a company which had developed software which could recognize what people were feeling by looking at their faces. It could do it better than humans can do it, faster and more reliably.
Yeah.
And that creates demand for a certain kind of certain sets of marketing data and marketing techniques, I would think, rather than capitalizing on pre-existing demand. I mean, can you think of any examples of startups that might have done that?
Yeah, I mean, the classic example was the Sony Walkman, right? Which created a demand. But regardless, at some point you have to, as an investor, you have to think who is going to pay for this, how much are they going to pay for it, and how many of those people are there. So it's one thing to say, okay, here's my framework of risks, but then you have to think, okay, how do I evaluate that? And the best way to evaluate that is by talking to people. And the key people that you want to talk to is certainly the management to understand their business inside and out. But the most important conversation you'll have is with the customer. So you must ask the startup to introduce them to their customer. And that's who you ask that question, Would you pay for this? How much would you pay for it? How many would you buy in a year? And how many of you exist in this world today? So startups do create a demand, as you rightly said, but the point is someone should be willing to pay for it, and you must identify that someone and talk to them about it.
Yeah, I guess in the tech boom of the late 90s, famously, nobody was asking that question.
Yes, that was unfortunate.
And you went further back in time with the Sony Walkman. I think there were dinosaurs walking the earth back when that was developed.
Yes, that's true. But I think that is a key point to good diligence, is ask the right questions. And I do want to dwell on this because, this podcast is about diligence. And if you don't mind, I'd like to talk about some specific questions that you must ask people. And we can use an example or we can go down other routes. But that is something that I would like to do. Would that be all right?
That would be perfectly fine.
Awesome. So one of the key things that I said is you must try to have a conversation with a customer. And in many cases, the company does not have a customer that's signed up, but they should be working with some potential customer to actually develop the product. And if they're not, then that's a red flag. So you should absolutely ask them, who are you working with to develop the product? May I talk to them? And it may happen that the company will say, oh, you know what, it's a Fortune 500 company, it's their vice president of whatever sales or product, and they're going to get spooked if you talk to them. But still, you must make a good attempt to understand exactly what I said. The number one thing is someone willing to buy this? So is there a market for it? So you must make an attempt to understand, would you pay for this? What are the alternatives that you're currently using? How much are you spending on that? Why do you prefer this solution to the existing alternatives? How much premium would you pay for this solution? So in a year, how much would someone like you pay? And how many of you exist in this market? Those are all great questions to ask a customer and validate their product. So that's the number one kind of person you must talk to. Besides that, a lot of companies we work with, we do a lot of talking to scientific advisors as well as external experts. And so if it is something that is in the in the biology field, for example, to prove that product, you need to have some data out. So if you want to say that, this drug works, there should be some data to say that it indeed, in fact, does work. So you have to talk to their scientific advisors or the scientists themselves and ask them, what is the data? What is the proof that it works? And sometimes they'll say, you know what, right now it's in literature, all right, so hypothetically it works. And that gives you a sense of the amount of risk involved. Then they could say that, oh, you know what, we've done animal studies, so it works in rats. Well, that's helpful. But of course, human beings are different from rats. So you want to at least have some kind of data or some sense of how much risk is there. If it's entirely hypothetical, then that's a big risk. Whereas if you've reached animal studies, then that's some risk mitigated.
At this point, I'd like to bring up something I brought to the attention of our listeners, I believe last week, which was a finding at the University of Nottingham in Britain, where a member of the Department of English, who specialized in Anglo-Saxon languages, found a recipe for a potion from about the 9th century.
Oh, a druidical potion. Okay.
Well, maybe it was druidical, but it was in a potions book in the restricted section of the Hogwarts library, perhaps. Anyway, she found it in the British Library, and it was meant to address a certain ailment. And she had the microbiologist from her university whip it up and test it. And what it did was it destroyed the MRSA staph virus, which has proven resistant to antibiotics. And they tried it first with a culture, and then they tried it with a live specimen, and it's a reliable medical treatment, evidently, at least to this far. So anyway, there they have, in my view, an idea, a 9th century potion, and now they're going to bring it to Propel X. But they have to have a lot more than good scientific findings in order to get it anywhere close to market.
Yes, no, they need to have data. That's what they need to have. But, in those times, what they could have done was administered this potion to 50 people, figured out how many had any side effects, and documented it. So certainly in those days also, I think they followed the scientific method. It wasn't just out of nowhere that they came up with it. But it's interesting that these things have existed for a long time.
Maybe there was a research grant from the 9th century, and
yes, that's possible.
There are reams of data inside the British Library.
Yeah.
Well, perhaps there's a more contemporary example, though, that PropelX has worked with. You and I were talking offline about a really interesting company called AIMkts.
Yes, so this company is called AIMkts, AROMYX. It's a very, very interesting company. What they're trying to do is digitize the sense of smell and taste. So as I mentioned, these are the only two senses which have not yet been digitized. If you look at our 5 senses, which is seeing, hearing, touch, it's really taste and smell that haven't been digitized. So these guys are kind of trying to cross that last frontier. What they've done is they've been able to replicate the nasal receptors outside of the nose, and they claim they've been able to replicate them stably, and they'll be able to reproduce them scalably. In other words, they'll be able to produce them inexpensively, right? And that this works. And each of these nasal receptors, they've identified about 400 of them that exist. And what they want to do is create an array of these receptors. So receptors are proteins, right? And they want to get them out of the nose and put them onto these little plastic chips. And what they want to do is for each chemical or each fragrance or each sense of smell that is around you, each they will expose these receptors to that sense of smell or to that chemical, and some of these receptors will get triggered. By triggered, I mean the way it works in the nose is, if there's a chemical, that molecule will come and bind to the protein in your nose, and that triggers a certain stimulus which goes to the brain, and the brain interprets it in different ways. Now, it's really the brain interpretation which is different between you and I. your brain might like a certain sense of smell, mine may not. So that's where we differ, is in the interpretation. But the actual binding is the same for everyone. But because we are so different in what we like, don't like, and the way we put it into words, if you and I were to smell the same thing, we would have a different description of it, right? But the thing is that if a chip is exposed to that molecule, it will always and every time potentially trigger the exact same receptors. It could trigger receptor 23, 37, and 115. And if you do that 200 times, it will always trigger those same receptors. So now you have a replicable and standardized way of describing smells, right? That's actually so novel. It's very abstract, but it is going to be used in the flavors and taste industries. So anything that has to do with food or with fragrances, right? So currently in those industries, they use professional smellers and professional tasters. And each time you have you could have 2 or 3 professional smellers, and they would describe it the same thing differently. So now they'll be able to just use this chip one time and get it exactly accurately capture that sense of smell. So it is a big leap, and people have tried to do this before. And of course, this research was originally funded by DARPA. There's been a few attempts to do this, but this company is now commercializing this. So it's a big deal.
Oh, I think it's a big deal. I mean, for example, your typical Masters party for when the golf tournament starts, you could pipe in the smell of the blooms and flowers at Augusta National Golf Course.
Yes.
And in fact, if you did not do that, your party wouldn't be much of anything. I mean, it'll create new expectations.
Exactly.
But I thought of a more profound application.
Uh-huh.
Nuisance law covers smells as well. So there are factories which give off certain odors which make it impossible to live nearby, and hence lawsuits happen. I suppose you could come up with ways to mask that smell.
Yes, not just to mask that smell, but I think to be able to measure and describe that smell itself is a big step, right? So
yes.
A factory could say, hey, my smell isn't really that bad, and then you can, but if it triggers receptors 27, 32, and 23, then it's bad, right? So you could actually make the law much more objective.
Wait a minute, I sense 1,000-page regulation about to be issued, and, and a lot of new jobs in the Department of Agriculture.
That's possible. That's another good thing about startups, is they create jobs.
This is really exciting. So we've talked in general terms about diligence with regard to deep technology, although it would seem to apply to a lot of technology, or to any complex product, really. Some of these are just universal principles. Mm-hmm. And we also talked a little bit about one of your companies, AIMkts. Mm-hmm. Maybe in the context of AIMkts or otherwise, you could comment on where your company, PropelX, does something different, how it adds value to the due diligence, not to give you an infomercial, but rather to illustrate in greater detail what's involved with due diligence in this area.
Yeah, absolutely. So now, just taking the example of AIMkts, that's a hard company to diligence, right? Because it's an abstract concept. I didn't know the science behind it when we started out. And so how do you get a fair estimate of what is the risk in this company? Where does the risk lie? Now, as we discussed, technology risks are pretty big for the companies that we deal with, which is deep technology startups. IP risks are major. There could be regulatory risks. So how do you evaluate them? And as I said before, you've got to talk to people. So what we have created is an online mechanism. I mean, it's really tedious for a company if every investor that comes in, and especially at early stage, you're investing small amounts of money. Every investor that's investing 25, 50K comes in and says, you know what, I want to talk to your customer. And you have like one customer who's a VP at a Fortune 500 company. You really don't want to bother them. So what we have done is we've created an online platform. You can go in and you can ask questions. Currently, you can ask questions of the management. There's a drop-down menu. You can say, I have a question for management, or I have a question for for an external expert, or I have a question for the scientific advisors, I have a question for the customers. We cover those areas, we collect your questions, and then we get the right people to answer those questions. And the single most important thing is actually getting scientific experts to respond to these queries and to, in turn, raise relevant questions. So, for example, in the case of aeromics, someone has to say, okay, what is the data that you have, right? How do you prove that this actually works? Have you tried this? How many times have you tried this? For how long were your receptors able to work outside of the nose, right? I mean, nasal receptors, nose environments are best for them, right? So how long do they work outside of the nose? So these are questions, frankly, that we got experts on our platform to ask these questions. So it was a really helpful process, because not only did they come and share a perspective, and this is not a video, it's really a text, where people said, I have a question, has this been done before? And then the expert, we actually have created a platform which brings together investors, experts, and startups. And we actively drive experts. Any investors can refer their own experts, and there are certain incentives for experts to participate. But the point is that the expert in this field, who was a pretty well-known person, he runs a center for smell and taste at one of the leading US universities. So he actually raised some very good points. What is the data? Show me the data. And in turn, the startup gets the opportunity to respond, so what we call a rebuttal process. And in turn, the startup is able to say, okay, look, here is the data that I have. And then you can look at the data and say, oh, so they've done this X number of times outside of the nose, and it has been successful Y number of times out of that, which is a greater than 50% chance, less than 50% chance. So now you know what is the key risk, and now they're trying to productize it, make it smaller, make it more easily replicable. So you get a much better sense after having experts involved in the process to understand where is the key risk. Is it that the science is not proven? Is it that they're not able to produce it at scale? Or is it that all of that stuff has been done and they really just need to do sales? So these questions of diligence are important. The way to do your diligence is to talk to people. And where we add value, frankly, is to be a platform, be the intermediary to help you talk to people, because it's really hard for 1,000 people to talk repeatedly to the same person again, right? So we enable those people to ask questions, we collect the questions, send them to the right guys, and post the responses. So it's a simple solution, but it's very important. You should not make an investment on a platform not having done your diligence. That's a sure way of losing your money. So at minimum, you should be able to pat yourself on the back and say, look, I made this judgment based on information. I didn't make it blind. I didn't follow someone else. I did my own diligence. I asked the questions. I made this judgment. And yes, there are things that are not in your control, but at least you would know that you made the judgment. It was your call, not someone else's.
I guess as you were talking, I was thinking about how without Propel X or other ways of getting information before the investment, you're really operating at an informational disadvantage. That disadvantage will be shown by the experience of the marketplace, because the marketplace will suss out all technical defects, will suss out all legal problems and product liability issues, all sorts. The market will do that anyway, and what you're really doing is creating a means by which to address the asymmetrical information distribution before the investment can occur, and you're allowing it to be addressed more efficiently and over a broader number of people.
Absolutely, and that information asymmetry, as you rightly said, is very acute in private markets.
Yeah.
Right, in early stage startups.
And in tech, because who knows what it is? I mean, you might, if you're lucky, if you've been good and good at something and made a bit of money and now you're ready to invest, well, you might have one or two good questions that are pertinent to a tech investment. But you need help from others.
No, absolutely. And these, not to say that, of course, you should do diligence on any company, And I was just describing the kinds of diligence that you should do on deep technology startups. But, again, I just want to come back to the point as to why we're doing this, is because deep technology companies are the ones that will take mankind to the next level. These are not apps which will help me make my parking better or help me find a friend with whom to trade clothes or something like that. It is going to make life meaningfully better for billions of people. That is what these companies bring. They will cure cancer, they will fight diseases, they will make food more plentiful. These are the companies that make a difference in the progress of mankind. So
and they'll make things smell nicer.
Yeah, yes, that too. That's a possibility. Aerobics will do that, I'm sure.
I think it's a heroic quest myself.
Yeah.
There are whole cities or parts of cities that really don't smell that nice.
Yes, so you could in fact create a counter.
If urban budgets could come into line again, this is a real opportunity.
It is. It is an opportunity. I'm not denying that. Absolutely.
So Swati, it's been a pleasure once again, and we thank you for being on Accredited Investor Markets Radio again. Thanks.
Thank you so much, Chris. It was a pleasure once again, and these are wonderful conversations. I think Accredited Investor Markets is an awesome publication. Thank you very much for having me.
It's very difficult to hear such things. You've been listening to Accredited Investor Markets Radio. Accredited Investor Markets Radio is produced by Stephanie Strait. If you have any comments or suggestions, please write me at ccahill@financialpoise.com. Let's do this again sometime.
Thank you for joining us. If you enjoyed this episode, you can subscribe through iTunes or Stitcher, or you can download our app from Libsyn. You can also listen right on our website, www.AIMkts.com. Each week, Accredited Investor Markets Radio brings you news and education about investing with a focus on alternative assets. To see a short-written summary of this episode, go to www.AIMkts.com. Accredited Investor Markets Radio is a production of Financial Poise Radio Productions, LLC.